Imagine you never looked at a single stock price for 10 years. You just watched the paycheck. Here's what one popular investment did. It gave its owners a raise, then another, 10 years in a row, through a pandemic, through the worst inflation in 40 years. Let me show you the picture because I think it'll change how you look at your own money. The investment is SCHD, the Schwab U.S. Dividend Equity ETF, a basket of established, profitable American companies with a long history of paying shareholders. Now, most people watch the price of an investment. Up day, good mood. Down day, not so good mood. But if you're building toward retirement income, the price is just noise. The dividend, actual cash those companies send you, that's the signal. And SCHD's signal has done one thing for a decade. It's gone up. Here's the dividend SCHD paid per share every year. Watch it climb year after year. From 38 cents to over $1. The income nearly tripled in 10 years. That's about 10.5% growth per year, every year, in the paycheck, not one down year. Now, here's where it really gets interesting, because a rising dividend in a good year isn't really that impressive. Any company can do that. The question is, what happened when things fell apart in the market? Let's look at 2020, COVID. The market dropped about a third in 5 weeks. Probably one of the fastest crashes in the history of the market. Terrifying. And SCHD's dividend that year, it went up 18%. Let's look at a more sustained one. 2022, inflation hit a 40-year high. Stocks and bonds fell together. The broad market was down about 18% for the year. One of the ugliest years investors have seen in a long time. SCHD's dividend, up about 14% for the year. The price of SCHD bounced around like everything else. Some years it fell, but the companies inside it kept doing the one thing that actually matters. They kept sending cash, and they kept sending more of it. The paycheck never got the memo that times were scary. All right, so let's make it real. Say you'd put $1 million into SCHD 10 years ago and just lived on the dividends. Never sold a share, never added $1. In year one, that income was around $30,000. By this year, that same position, same shares, you didn't touch a thing, would be paying you roughly $81,000 a year. Your income more than doubled, and you never had to sell anything to get it. Meanwhile, inflation over that same decade raised the cost of living by roughly a third. So your groceries went up maybe 30-something%, and your paycheck from this investment went up over 170. That's what it looks like when your income outruns inflation instead of chasing it. Now, here is the move if retirement is still a few years out. In that example, you spent the dividends, but before you retire, you don't need the income yet. So you reinvest it. Every dividend buys more shares. More shares pay more dividends, which buys more shares. It's a snowball, and it's quietly building your future paycheck while you're still working. That same million with dividends reinvested over the decade would have grown to roughly $3 million, and a $3 million position throws off a whole lot more income the day you finally flip the switch and say, okay, now I'll take the paycheck. I'm not here to tell you to run out and buy this one fund. That's not the point. The point is the mindset. Great companies raising their dividends through good times and bad. That's an engine you can build a retirement on, and it rewards the person who can sit still and let it work. The market will always give you a reason to panic. Your job is to keep your eyes on the paycheck, not the price. If that's the kind of investing that makes sense to you, subscribe. This whole channel is about helping you retire with confidence. And remember, I'm in it with you. Okay, I want to point this out, a compliance disclaimer here. This content is for educational purposes only. It is not investment advice or a recommendation to buy or sell any security. SCHD is used as an illustration. Past performance does not guarantee future results. Dividends are not guaranteed and can be reduced or eliminated. All figures are approximate and split adjusted. Consult a qualified advisor before investing. Jarrod Adams Investing is a registered investment advisor.